Tesla dropped as low as 18% today, and this video is going to be a lot longer and go into a lot more detail, not just from a technical standpoint than I normally go through, but also a fundamental standpoint, because today was absolutely crazy. Now, luckily, we closed our short-term call options back here on May 30th. If you want to know why, essentially the daily BX trender, which is the indicator that I use each and every single day, you can get it for free, as well as all of my courses down in the description, turned red. This means that short-term buyers are leaving the market. Now, we're going to talk about technicals in this video. We're going to talk about what I think is going to happen from here when I plan to re-enter my short-term calls. I did sell some cash secured puts today that we're going to go over in this video, and we're also going to cover my 2026 leaps. But I also posted over on my Twitter specific questions that you want me to cover in tonight's video. And we're going to go over the top ones in this video, not just from a price action standpoint, but how I feel as a potential Tesla long-term investor. Normally, I'm focusing on just trading Tesla and trading other stocks in the market, but I did sell some cash secured puts today that I plan to get assigned to the shares if it happens and start a long-term position at $250. Now, before we get into it, my name is Peter DiCarlo. I'm a full-time trader. I've been doing this for the past 11 years. And as I said before, I share my entire trading system, all my indicators, in the link in the description. The only thing that I ask in return is that you follow the system, that you actually take all of the courses, and you don't try to shortcut things. Now, in last week's video, we talked about how we removed our outlook short-term for Tesla on the daily chart. We played this breakout here for 11% because the BX flipped green. Then we played this breakout here for another 16%. And then we also played this small potential breakout here, which ended up in a loss. Now, it was hard for me to stick to losing there and walking away because I focus on my system when it comes to trading over anything. I don't try to focus on timing the bottom, timing the top. Those are things that I cannot do long term. But what I can do to perfection long term is to stick to my strategy. And you can see that if we just stuck to this strategy alone, over the past 14 years, we would have made a 26,000% return. We would have beat the buy and hold on this. And more importantly, we would never have to think to ourselves each and every single day, should I buy? Should I sell? Is the stock overvalued? Whatever. We just simply follow our entry and exit criteria. Now, we've been talking about this level here specifically at $330 to $350. This indicator, and we teach this over in our courses on the right, is called the volume profile. Now, a normal volume indicator is going to be those vertical bars at the bottom of the chart. This is going to show you how many shares were traded within the day. And to most people, they like trading those, they think it's important. But what I focus more on is where in the past year has most of the trading action been? Well, the bulk of the trading action has been between $350 and $331. That's called the point of control, and that's this red line because it's showing us the most amount of shares being traded. This area tends to be a strong resistance and also a strong support. Another big area was down here from about $260 to $280. Once again, this is a strong resistance until it broke, and now potentially a strong support. This is why we were calling that if this zone right here of $330 broke, that we would fill very quickly, like a hot knife through butter, down to that $280 support. Now, I thought that this was going to take weeks, right? A lot of people are going to say, and you have a totally valid point here, that technicals don't work. Technicals didn't know that Elon was going to start tweeting about Trump and that their bromance was going to end. And you're right. Technicals didn't know that that was going to be the catalyst. But technicals did show us multiple days in advance that institutions and people who can actually move the market were not buying into the breakout. So I want you to think that, right? This catalyst could have been Elon, the catalyst could have been deliveries, the catalyst could have been whatever it is. The fact is that they were not buying short term into that breakout. And once this support level breaks and we have very thin volume on the volume profile, which is what we just covered, this move will happen quickly. For instance, this move, about 20% down, happened in about 2 weeks. This move of 20% up happened within 1 week. This move of 20% down happened within 2 days. Now, today, I did open a cash secured put position on Tesla. If we go into our trading journal, you can see here that I sold 10/6/20, so that's June 20th, coming up very close, 2025 $250 puts. Now, we explain what cash secured puts are in our free Options Simplified course. It's basically teaching you how to trade options if you're a complete beginner. But what this means is that I'm not bearish. I'm not buying puts here. When you sell a cash secured put, you pick the strike that you think the stock will not close below, or the price that you would be okay with owning the stock at long term. So I picked $250 because that gives me a good buffer here as we move into this old resistance and new support level. So if we bounce, then I will end up making about $11,000 and not be filled on that position for shares. But if we don't bounce, then I will be forced, and this is very important, I'll be forced to buy shares at $250,000. I'm sorry, $250 puts, and it would be $250,000. So if I get stuck with this and Tesla closes below $250 by June 20th, I will be forced to buy $250,000 worth of Tesla, which I don't mind doing. And we're going to talk about my thoughts long term later in this video from a fundamental standpoint. But that is the trade that I currently have. It's not inherently bullish. I don't think this thing is going to bounce short term, but more so this is my way to passively start a long-term position. And as we stated, if this bounces and does not close above $250 on June 20th, then I get to keep the $10,500 in premium and I do not have to buy the shares long term. Now, the other thing to talk about is my 2026 LEAP options. We closed out our short-term calls last week for reasons we already disclosed. My 2026 call options, I'm still holding. I went in with 50% of my planned position sizing because my thought process is the monthly BX. It's now red, but here's the most important thing. We only focus on confirmed candles, meaning candles that are closed. So we're not looking at this month's candle because we still have a whole month of June left. We're still focused on the prior month. The prior month has a green market bias. I'm sorry, a green BX trender. That is what we want to see. The weekly, even though it's pulling back, is still green. So as long as those two requirements are met, I will continue to hold on to my 2026 calls. And I will average down on those 2026 calls when the daily BX finds a bottom on the chart and the daily BX flips green. Now, in our analysis, the last time we did a video, we said that we needed to remain objective and that if price rejected here as we suspected, that we would most likely see a wedge, much like what's happening now. So I think the low here will be $250 or another 11 to 12% drop. Worst case scenario. I think there institutions would step in and start buying the dip. So my outlook for the rest of 2025 doesn't necessarily change, and we are going to talk about this a little more in the video later, but as of right now, I still think 500 is on the table for the end of this year. What would really break that down is if $250 broke. That would be catastrophic. That would take that entire analysis and thesis off of the table. Now let's move into your questions. We're going to start first with the technical ones, then go into the more fundamental things, and more importantly, Elon's leadership, which a lot of people are asking me about. Al Pacino has levels of support. So we already went through this, but short term, I think best case we bounce at $280. Realistically, what I'm looking for is $250. I think $250 would be the worst case scenario. That's where I will get assigned my shares that's where I will start the long-term position. And then if we actually find a support on the BX trender, that's when I will add to my 2026 calls. Barl asked criteria and thoughts about re-entering. That lines up with what we just said. My criteria for entry, and I want you guys to understand this, is not based off of support levels, right? A lot of times people will buy as the stock is coming into support, which is better than buying when it's at all-time highs. But what I look for is not just support, but making sure that people are actually buying the stock. More importantly, institutions who can actually move the stock higher. That's why I focus on this BX trender indicator over anything, right? I'm not looking at price levels. I'm looking at buying pressure. So for me, it's very simple. I'm going to re-enter or I'm going to average down when the daily BX flips green next, and no sooner. Angus McKay asked, what is the logic behind Elon sacrificing the value of the stock and shareholder sentiment to argue about federal bills? Now, this is where, and kind of as we get into this fundamental part and the questions that you guys have, that I want you to take this with a grain of salt. I am not a political aficionado. I am not somebody who talks about fundamental investing. I am somebody who can tell you and teach you exactly how I've made the money that I've made in my career by simply following my system. But it seems that a lot of you are asking me these questions, and so I want to answer them. In my opinion, right, when it comes to Elon and what he's currently doing, I think that there are these multiple hats that obviously that Elon wears, right? There's, in his eyes, the American, the patriot, the person who he believes should be doing things right by his own accord, whether we agree with him or not. But then there's also the CEO of a publicly traded company. And I am somebody, even though everything we talk about here is not financial advice and what I teach you is not financial advice, it's just what I'm doing, I feel that when you have followers, when you have shareholders, when you are managing money for other people, you have a fiduciary duty to put those people above you and your thoughts. You have a right to the shareholders to put them above anything else, above your thoughts, above how you feel. And some of you might disagree with that, right? And I'm one of those people who's torn as well, because I try to think to myself, right, and be empathetic to this entire situation, saying, well, how would I feel? Because as a man, and I'm not saying this is right or wrong, but if I feel that injustice is being done, or if I feel that something like this bill that he believes is going to bankrupt the country is going to bankrupt the country I love, well, I need to do something about it. I need to stand up. I need to express my feelings. But then also, you have to have a fiduciary duty to your shareholders, because at the end of the day, if you start scaring all of these shareholders away, and we're not just talking about retail here, right? You and me, we are retail. I'm talking about institutions who are investing in this company. If you start to scare them away because you're being a radical CEO, that's not good. And so when it comes to this, it's something that I personally am torn on, because I don't think he should be necessarily like not voicing his opinion, but maybe do it in a less radical way. And we know that he dropped the nuke of the island today. I'm not going to talk about that necessarily. I don't want to get this video taken down or demonetized, but that's one of those things that, like, whether it's right or wrong, it's a very radical thing to say, because now you have people saying, well, did you know beforehand when you helped Trump get into office? When did you know? Did you know after? Is that why you left? Are you just making it up, right? Like, all three of those don't really look good. And so that is something that I'm torn about. And if I was a CEO, not something that I would be doing personally. The next question is from Paul Stewart, who asks a very good one. The impacts of the elimination of government subsidies on Tesla's profit and value. This is a great question, because I think that it's kind of double-sided, right? I think short term it's going to hurt, but long term, and more so talking about getting rid of the EV tax incentives and credits and all of that, short term it's going to hurt because the cars are not cheap, especially if we're moving into a recession. The other thing, though, which I don't really think a lot of people are bringing into account, is that if you're invested in this company long term, you're not looking at it like a car company, right? You're looking at it from a robotics company, and you're looking at it from an AI company. If we're looking at a $2 trillion, $4 trillion, Kathy Wood's $8 to $10 trillion market cap in the next 5 to 10 years, it has nothing to do with vehicles. It has everything to do with robotics, everything to do with the robotaxi network, everything to do with the SaaS model of full self-driving, which means software as a service. So I think that short term it could hurt, but long term it's really not going to be that impactful, in my opinion, if you're looking at this from a robotics and AI company. And now the final question from water flow investors. And this was one that a lot of people were asking. How do you deal with losing and coping with losses? And this is once again another twofold question, right? I think the biggest thing when it comes to losing is that you first have to remember the frame as to why you entered the position. If you're a long-term investor, what's happening today shouldn't matter unless you just don't agree with your CEO anymore. Then that should matter. But price action, price pulling back 16%, that shouldn't matter, right? It didn't matter a couple of weeks ago when it ran 16%. It shouldn't matter this week when it's down 16%. If you're investing in this company or any company long term, what happens to the price within a couple of weeks does not matter. Now, that said, losing sucks. But with my strategy and what I've been doing for a long time, it happens, right? Like I fundamentally understand, and you can see here following our strategy over the past 15 years, we only have a 53% win rate. If we look at our returns for the past 2 years, we only have a 61% win rate. If we take a look at this year to date, we have a 56% win rate. So importantly for me is the understanding fundamentally that losing is a part of the game. And so when I'm taking a trade, I never expect to win. I actually expect to lose each and every single time. And this goes against human nature. And this is why it's so hard for so many people to trade, because they're not used to it. They're not used to going into their job and losing money. They're not used to putting in this work and effort and stress and losing money. But when you understand that it's simply a part of doing business, then you start to accept this. Now, I think the biggest thing when it comes to dealing with losses is expectations. A lot of people have unrealistic expectations, and like we just went over, my expectations are very realistic. I'm expecting to lose 47% of the time. So if I take a position and it loses, much like it did a couple of days ago, I have no problem moving on with a 2.5% loss or about a 10% loss on my calls and just waiting for the next opportunity. And now I think another thing that really messes with people is the fact that their position sizing is just dead wrong. Inside of our Discord community, I have Zapier post my position guidelines each and every single morning. And so I think the reason that it's so hard, and I'm not saying water flow investor that you're doing this, but I think the reason it's so hard is people are just trading with too much of their portfolio and too much money at one time. So my golden rules for position sizing, right, is if I'm trading options, I'm normally trading 3% of my fund per options position, 5% max. If it's like a smaller, if I had like, 30, 40 grand, maybe I'd bump it up to 5%. So that means that if I'm trading $1 million portfolio, my max position size is going to be $50,000 in one trade for options, realistically about $30,000. So if I was buying Tesla calls, I would go in with $30,000 worth of August or September calls. And that's important because if something like today happens, even though our criteria was not met, and I lose the entirety of the position, I lost 3% of the account, which is not the end of the world. Then from there, max of the fund at one time is 40%. So that means that I would never have more than $300,000 to $400,000 worth of total cumulative options positions open at one time in case a black swan event happens, something catastrophic like today, a 17% drawdown. You need to protect your downside above anything. And shares is a little bit different, right? In most cases, I'm looking at 10% position sizing. So if I was trading shares on Tesla and I had $1 million portfolio, I would be looking to trade $100,000 in shares per position. And this will scale depending upon how much money you have or how little money you have. So if I was trading with $10,000, I would not go in with any more than $400 to $500 worth of options or $1,000 per position on a single trade. And I think the reason that losing is so hard is that number one, it goes against human nature. But number two, people are just trading with too big of a position size relative to their accounts. And therefore, each and every single trade is a make or break opportunity. And you should never be trading from that mindset or that framework. You should always be trading with proper position sizing because whatever happens day to day does not matter. And to share with you guys this, right? Like, and I don't say this to boast or gloat or anything like that, but if we just look at our returns on Tesla alone in the past 2.5 years, we've made $1.8 million. The call options that I have for 2026, that position size is $100,000. The 2025 calls that I just closed out for a loss was $50,000. So even if both of those positions evaporated overnight, I'd be giving back less than 10% of what I've made on Tesla in the past 2 years. But this is what makes trading so difficult, is actually sticking to these position requirements, especially as you scale. I notice that for a lot of people, when they start to win, they get ahead of themselves. They think that they're much better than they are, or they think that they know something that nobody else does. And so they start to scale up way too quickly. So to wrap this video up, at the end of the day, I still believe in the company long term. I still think that they are going to be one of the most undervalued robotics companies in the next 10 years, one of the biggest AI plays in the next 10 years, if they can actually execute the way that they plan. And it doesn't mean that this is going to work out. It doesn't mean for sure that at the end of the year, we're going to be at $500 or even $600, but it's still a risk I'm willing to take. And as far as Musk as a CEO, that's up to you to decide. Do I wish that he would be less brash in the way that he's dealing with things right now? Yes, but that's not for me to decide. As always, guys, thank you so much for your time and attention. Comment down below what your thoughts are about this entire situation. If you want to learn my exact strategy for free, get access to our 12-course masterclass system completely for free. The link to that is in the description. And if you want to join our private Discord community, get access to all of my trades, all of our trading bots, which focus on looking at the market literally 15 minutes per day right before market close, then go ahead and check out the link to the Discord community in the description.